Hello, this is Doc Severson for the Theo Night Report for Thursday, April 27th. The big story today was right after the bell, as a lot of the tech bellwethers reported earnings, such as Amazon, and Amazon is currently up, a little over 30 points right now, getting a little soft right now, but probably still going to be holding up by tomorrow morning. So big move here. Up about 30 points, and that was one of the better performers. Of course, we also had Google reporting after the bell, and this one is up from about 891, up about 34 points itself. So this one is doing very well. So that's the good. Now, some did not do that well. So some of the other bellwethers that we had were Microsoft, and Microsoft is getting hammered right now after hours. So the initial price was about 68, and it has gone down to about 67 or so. So, in all, just because of the weighting of this one, it's had such a big effect on the overall Nasdaq futures after hours. But this one not doing so well, but actually finding a little bit of a dip to buy at this point. And worse yet was Intel. Actually, Intel just getting hammered pretty hard right now. Going from about 37.5 all the way down to about 36 right now. So on a percentage basis, a pretty strong move, and not so good for the big chip maker. Now, overall, markets were actually fairly soft and trendless today because a lot of them were looking forward to the results after the hours, and we're kind of holding their breath. We can see that the S&P is basically just sort of flagged out. Now, I'm going to come back to this level in just a minute and talk more about this, because this relates to a strategy that we're bringing to bear on unexpected moves. But right now, the S&P has been basically holding underneath that 2,400 level for the past couple of days. And the Russell has actually been surprisingly strong, although a little bit soft today. A little bit soft today after such a strong move. We can see that this is now started to hit exhaustion, which is not necessarily a bad thing in the short term, right? For a small time frame like to hit exhaustion. But we have a big energy number on the weekly chart. So my expectation for the Russell, as long as this holds up here, is that perhaps it will just flag out here for the next few days, build up the energy again, and then start to pile on the coals here. We'll see what happens with that. Now, the issue with the Russell is that, again, big concrete overshoots down here on the monthly chart. This has made such a strong move. It's unusual to see this level of linearity really play out for additional gains without some more consolidation in the near term. Here's the Nasdaq futures, and this is, of course, also factoring in all these after-hours reports through Amazon, Google, Microsoft, Intel, and it is just taking no prisoners right now. Now, the flip side to this is that for all this energy that it's built up over the last 6 weeks, all of this is playing out in an awful rush to the upside as we're starting to hit the exhaustion level now. Not only on the daily chart, but also back into the weekly chart as well, too. So this chart desperately needs a larger time frame consolidation. And what we have to be concerned with here, and this is across the board, regardless of what chart we're talking about, is that if any negative news that hits the tape right now, which is not already priced in, and I'm not talking about the government shutdown. Please, really, seriously, I mean, if you want to talk about this, go back to October 2013. Take a look at the first 2 weeks in October 2013. Government did shut down back then for 2 weeks, and nothing happened to the market because the market is always forward-looking. They figured, yep, they're going to get this worked out. This is not going to linger for too long, and that's exactly what happened. So nobody figures that the government is going to shut down. This market does not care about that at all right now. What could knock this market down and could create a sell the news event would be obviously any unexpected geopolitical risk, and you just don't know what's going to happen in Asia right now. That is probably the number one risk that's out there. So again, the market seems to be brushing it off right now as just more big talk from a little man. But we'll see what happens. I mean, if anything does happen over there, it's going to be, when in doubt, palms out, sell now, and evaluate the risk later on. Okay, something we've been following here is that the expected move going into the week is a well-known figure, and at this point, as of Sunday night, and this is before any of the French election thing came along, so basically, as the market closed down last Friday, we had some pretty serious, well, I wouldn't say serious, but these days, again, a vol of 17 is serious, but we had a lot of volatility up there, and we had an expected move of about plus 4.6 points. Now that's 46 points on the full S&Ps. And so what this did mean was that we had about a 68% chance that the price was going to be as high as 23.19 to the upside and about 230 on the nose to the downside. All right, so let me squish this up and so you can see this a little bit better here. So again, 239.19 to the upside is the upper target, and then 230 was the lower target for that, with the opening price or the closing price on Friday at about there. So that was our expected move. So the price was going to be staying within this level. There was a 68% chance that the price was going to be within that period by expiration on Friday. Now, what we've seen is that the price will typically pick a boundary, one boundary or the other, and then press that and then find that as resistance or in some cases support to the downside for that boundary. So one of the things that we did yesterday as the price got up to that level is we faded it. So that's one simple thing that you can do, is either you can speculate on the direction of that. In other words, take something long if you think it's going to be long, or short if you think it's going to be short in that direction, or you can simply fade either level from there. And that's the trade that we took yesterday. And so that's, I believe, one setup that we're going to be looking a lot more at in the near term. All right, folks, that is it for today's report. Thanks for listening, and we'll see you tomorrow. Take care.